Hi, I'm Kevin Flynn, and welcome to Avalon's Market Minute for the week of January 18th. Markets managed to creep a little higher again last week, despite opening lower every day but one. As the Wall Street Journal headline put it on Friday, stocks put their rally shoes on. The main catalyst last week was a conviction that the market has to go to 1,500 on the S&P 500. And there are other nice round number targets beckoning as well on other indices, like 900 on the Russell 2000. It's the driving factor behind nearly every dip being bought. The market was given an extra boost by a seasonally adjusted weekly jobless claims number on Thursday that was supposed to be the best number in 5 years. It was about the most suspect number in 5 years, so far as I'm concerned. Claims were actually higher than the equivalent week a year ago, but were reported as 10% lower. The calendar doesn't quite line up exactly, but a difference of only 2 days shouldn't have had such an impact. Now, looking at earnings reports, so far they're nothing to write home about. Sales growth is averaging just over 2%, with earnings growth just under 2%. Management doesn't sound terribly excited about the rest of the year's outlook. But what does all that matter? Fundamentals didn't matter much last year, so why start now? Managers are nearly always bullish at the start of the year. So we should make at least a run at 1,500, possibly a little higher, before the momentum subsides. Now, Friday was the expiration date for January options, and that usually removes some buying support from the market on a short-term basis. The second half of January usually sees a pullback, partly for that, and the S&P 500 is already up over 4%. All of that argues for at least a pause soon, but the market will be looking for any excuse to take out 1,500 first. Now, finally, let me say a word about Apple. I warned viewers last month that options trading in Apple was having a disproportionate influence on the stock price. I think you should avoid making short-term trades in either the stock and especially the options, and here's another reason why. Last Wednesday, I noticed that there are over 200,000 call options with a strike price of $500 or above, and 200,000 put options with a strike price of $500 or below. I predicted in my weekly column for the Seeking Alpha website that Apple would finish Friday at $500, thereby rendering all 400,000 of those options worthless. Well, Apple finished Friday at exactly $500, and every single one of those options was worth zero. I'm Kevin Flynn, and thank you for listening to Avalon's Market Minute.